you gonna do, fiat dollar? On CryptoBullGod and his crypto maniacs and the entire cryptocurrency market run wild on you.
Welcome in. I am the CryptoBullGod, and this is the recorded on Tuesday, airing on Tuesday, January 18th, 2022 CBG podcast. You can find me on Twitter, Tradingview, YouTube, and Instagram at CryptoBullGod. So it feels really good to feel like I'm getting back into the swing of things. You know, the fact that I've been a little bit more out of touch for those who follow me on Twitter, even Twitter I've been a little bit more out of touch. It has zero to do with the market. It has everything to do with the fact that with the holidays, I've been doing a lot of traveling over the course of the past month. So full disclosure, I've been away from South Florida for about a full month now. So as you can tell, probably by the podcast itself, my voice sounds a lot more like normal. If you heard the prior podcast, my voice sounded a little bit different because I was recording on a headset on my laptop. So my voice sounded different. So it feels really good to be back in my home office and doing this shit I love to do. So real quick, did want to mention, I will leave a link in the description. I'm very excited as well to get back to recording what I honestly enjoy recording most of anything that I do presently, which is the CryptoBroz podcast. So my brother and I will be doing a brand new episode. We've been off air for about 5 years, it feels like. So no, really, it's probably been, 6 weeks. I have no idea. 5 weeks, 6 weeks, I have no idea. But it's been a long time. So we're going to be doing a new episode of that tomorrow as well. So check it out. Subscribe to the channel. I will leave a link in the description below. And if you haven't already, drop a like, leave a comment, subscribe to the channel. It helps the YouTube algorithm out. If anything hits you during today's podcast and you just want to share a thought, I would appreciate it. Just engaging with you. I should have a little bit more time coming up over here in the next couple weeks to get back to people in the comments. You know, I saw somebody else say this recently. So, right now things are a little bit more challenging because life is just a little bit different now. I've kind of alluded to that before, but I put out as much content as I can, whether it's podcast material or a TA video. I'm hoping to do a TA video here soon. Actually, I was looking at the timing of a Bitcoin update video that would make sense to do by next week. So I'll probably do an update video next week. But where was I going with this? Wow, I'm getting, I did celebrate a birthday recently. Maybe age is finally catching up to me. I don't know where I'm going with this. Oh, hey, by the way, this is what I wanted to say. So what I was saying is I try to put out as much content that I can, but I have a full-time job, right? And it keeps me very busy and been traveling with the holidays. And I have other things in my life that are keeping me a little bit preoccupied right now. So things are just a little bit different, but once things kind of settle down a little bit more, I'd like to have a little bit more rhythm and frequency with which I put out material, and things should look a lot different for my YouTube channel and also Twitter account. So I'm very excited for those changes that are inevitable for this year. But for now, I'll just, keep trying to help everyone out as much as I always do and keep, putting out the material. So one thing I wanted to hit on, since I don't think this is the first, no, this isn't the first podcast. And quite frankly, I forget if I mentioned this last podcast because it was right before my birthday. But I did lose the double or nothing bet, obviously, with Mini Shift. So props off to Mini Shift. He did win the bet. I actually saw him recently this past weekend. And on the $100,000 bet. So I think at this point, I threw out a final bet with him. My bet was for 100 Bitcoin hitting $135,000 by the end of this year, and I think he's tired of the bets. So we left it at he put the price point I think at 100,000. But the point is, we'll just get together at the end of the year and somebody's buying someone dinner. So it's a lot more fun in nature. So the mini shift bet is off. I should have, obviously, hindsight 2020, I should have taken the original bet and not done the double or nothing. But timing, as everyone can tell, timing of the crypto cycle top has been taking a little bit longer than myself and many others have anticipated. So with that being said, let's get into the Bitcoin TA update. And before we do that, actually, I just wanted to give a quick shout out to a very young fan who is tuning in, JC. She apparently is newer to the cryptocurrency space. JC hopefully owns some Bitcoin, but she's very good apparently with cartwheels. She is phenomenal at doing cartwheels. So just wanted to quick give a shout out to JC. I know that she's listening and hopefully is building up her Satoshi stack as we speak. So let's take a look at Bitcoin. There's a few charts that I have in front of me. That's a lie. There aren't a few charts I have in front of me. I have probably 20 charts in front of me. I have a lot of charts that I've been looking at today. So a bunch of them are Bitcoin. Let's kind of start. Let's start on the smaller time frame. As you know from my prior TA videos, I really like to focus on this 12-hour view. And right now, what is going on, and I've tweeted about this again at CryptoBullGod on Twitter, the 50 simple moving average, which is below the 200. This 50 simple moving average right now is pushing price down. What I indicated on Twitter is the first step towards a true recovery in Bitcoin and all of crypto is we need to see on that 12-hour chart, we need to see price get punch above the 50 simple moving average at 45,000 and stay above it. I don't mean a price wick. I don't mean a 12-hour candle wicking above it. No. I mean price action getting above it and staying above it. That's step one. Step two, I have a resistance area that's drawn right under the 200 simple moving average. And that would be around, it looks like, 51 to 52,000. That's our prior lower high. So one of the charts that I put out there on Twitter, and this is why it's important to follow me on Twitter if you're not, I drew out 3 lower highs. And if you're getting lower highs and lower lows, those are the basic building blocks of bearish momentum. What we want to do is we want to reverse that trend. Now, I personally still feel like we saw our low come in on the 10th of January at 39,000, we'll call it 700, 800, or maybe it was 600. Whatever the case is, looks like 600. Whatever the case is, that falls right in line with what I tweeted out on my birthday. On my birthday, on January 7th, what I tweeted out was, hey, for the second time, I called this back in June, July, Bitcoin has bottomed at 40,000. And if it hasn't bottomed at 40,000, my view is that we could get some sort of quick price wick down into the $39,000 area. That's exactly what happened 3 days later. Now, it is my personal belief, and I am never one to say with 100% certainty what will happen. You should run the other direction if anyone ever says that. No one knows with 100% certainty what's going to happen. But it is my belief that we have bottomed. There is certainly, we'll kind of get into it in a little bit here when I kind of speak to the charts, but there is certainly a possibility that we haven't bottomed, that we could go lower. And that's obviously, there's a probability for that. But my view is we have bottomed. And so speaking to step two, what we want to do is we want to take out that prior lower high. And what we would do if we did that is we would begin to build higher highs and higher lows. That's what we want to see. So step one, get above the 50 simple moving average. Step two, let's negate the lower highs. And let's get above 51 to 52. Now, the interesting thing is if we get back above 51 to 52, that takes us right at that 200 simple moving average on the 12-hour view, which I've spoken to many times. Again, what I'm speaking to in the charts right now, you don't need to be looking at the chart. I should be able to explain things in a way that you understand my commentary. That if you've been here and you've followed some of the other TA videos, you're a subscriber, and you've watched the other TA videos that I've spoken to on the 12-hour chart, then you know exactly what I'm talking about. There's no point in having a chart in front of you. But getting above that 51 to 52 puts us right close at that 200 simple moving average, which is the ultimate line we want to start punching above. And again, I reiterated this on Twitter. On smaller time frames, like a 12-hour chart, once we begin to see momentum turn, okay, and we start to see bullish movements start to resume within the price of Bitcoin, as long as that bullish momentum continues on the 12-hour chart, the bullish momentum on a smaller time frame, like a 12-hour chart, will bleed over into the higher time frames. So that eventually what you'll see is the 1 day, 3 day, 1 week, 1 month turnaround as well. Speaking of which, let's quickly turn to the 1 day. So if I gave you a quick update on the 1 day, what I would say is, we did get a death cross, which is never good to see. We saw a death cross on the 14th of January. That's when the 50, again, on any time frame, in this case the daily, which is most common to look at it on, that's when the 50 crosses below the 200 simple moving average. So that is not good to see. We don't want to see price action on the daily stay much lower below the $48,000 mark, which is the 200 simple moving average, for much longer. We want to try to see some momentum build here and get back above 48,000. Now, if we zoom in on a weekly, something that I haven't seen anyone mention yet, which is not good to see here, is that we are seeing the potential on a weekly view for the 10 simple moving average to cross below the 50 simple moving average. That's also something we won't want to see. In general, guys and gals who are not familiar with charts, why would a 10 simple moving average cross below the 50 simple moving average not be a good thing? Which, by the way, hasn't happened. That has not occurred since February of 2020, which is when we saw our March capitulations. That's the last time that happened. On the weekly view, again, this is weekly view. Why would we not want to see a 10 cross below a 50? And we're talking about simple moving averages. Well, in general, what you want to see with moving averages is you want to see them move in ascending order. So you want to see the 10 simple moving average above the 20 simple moving average, which is then above the 50 simple moving average, which is then above the 200 simple moving average, right? So they're sort of in ascending order. Or I guess that's descending order. Whatever the case is, you want to see in order from top to bottom on the chart, the 10, then the 20, then the 50, then the 200. Once you start getting the smaller time frame charts cross below the higher simple moving average charts, that's not a good thing, because what is it actually saying? If a 10 simple moving average closes below the 50 simple moving average, what it's saying is more recent price action is lower than what it has been on average for a longer time frame, in this case 50 days. So we don't want to see that, or 50 weeks. So we haven't seen a 10 simple moving average cross below the 50 simple moving average on a weekly in a while, and it looks like it might be setting up for that. But we have to see how this weekly candle closes. There's still, many days until the weekly candle closes on Sunday at 7 p.m. Eastern Standard Time. Now, the other thing that I've seen get some recent attention, this will be the last chart I speak to on Bitcoin. I'm going to turn to Ethereum for a moment. The last thing I wanted to speak to with Bitcoin, where's the right chart? Too many charts. Actually, I think it was this chart. I think it was the same chart I had pulled up. Well, whatever the case is, I can still illustrate the point. I saw a lot of people speak to the monthly chart, and one of the things they were speaking to, so first off, one thing I wanted to state here, and this kind of goes back to an earlier point, there is sort of, if you look at on a monthly view, there's sort of this, I would actually draw this line up a little bit more. I have it at 58,000, but I think it's a little higher right there. Okay. Right at 61,600, looks about. So there's a range. There's a price range. If you look at a monthly view on Bitcoin, Bitcoin's right now in between a range between, we're going to call it 61,600 and 29,200. Okay. 71. Okay. So basically we're going to say, let's make it nice round numbers. 61,000 to 29,000. Okay. If Bitcoin starts losing support within this $40,000 range area, there's no reason it can't have a quick wick some sort of short-term price movement all the way down to 29,000. That is a possibility. Do I think that's going to happen? No. Is it a possibility? Yes, it certainly is a possibility. But what we're seeing on the monthly view right now, what we don't want to see, this is not good, is if you look at the MACD this month looks like, depending upon how the month closes out. And again, I want to reiterate, there's still 13 days in the month. A lot can happen. But depending how the month closes out, the MACD looks like it wants to cross, okay, a negative cross, all right? Not a good thing, because typically when there's been a negative cross, that has not resulted in good price action. If we saw a negative cross this month, that would certainly lean me towards being more bearish in the shorter term. We could see price movement go back down to the $30,000 or $29,000 area. But we have to see how this month closes. One possibility is we do have a stronger close to the month, and the MACD lines sort of follow one another, and they're closely aligned, and then we sort of get a break back up in February or March. Again, I'm in the camp currently. My alternative hypothesis from a timing perspective is that Bitcoin's still going to be topping in the first half of this year. Okay, sometime no later than by July. Okay, I could of course be wrong. Timing has always been the most difficult thing to discern, but that is my current view. And so it wouldn't shock me if the lines came close to crossing but didn't cross on a monthly view, and we sort of got some movements up here towards the end of the first quarter. But something I want to quick hit on before we get back to Ethereum is, this probably should be the next TA video I work hard at putting out. And that is, what I've spoken to this many times in the past and haven't put a video out on it yet, but why do I feel so convicted that the market has not topped, right? So one of the things that frustrates me is when people become impatient, and because things are taking longer than expected, myself included, things are taking longer than expected, it leaves me frustrated when people are highly impatient with that. So just because things might take 6, 7, 8 months longer, that, in my opinion, is not what you should be focused on. What you should be focused on is there a great reason to be concerned that we really did top? We essentially double topped in the market, and we're going to undergo some sort of massive bear market for the next couple years. I don't see that. The last leg of this crypto journey has not occurred. There's still a euphoric leg that's going to go massively higher, in my opinion. And what I need to do is put out the video and clearly convey that based on the charts and data science models that I'm evaluating that tell me that. So look for that here, hopefully in the next 1-2 weeks. Give me 2 weeks, but I want to put something very concrete together. But again, the most important thing to focus on, the most important thing I'm focused on, even though prices are at more suppressed levels than I would have thought at this point, is that I feel very confident. I feel extremely confident that the market has not topped. And what simply has happened, and you can see this, people have put charts out on Bitcoin that clearly show this, which I agree with. Bitcoin has just been in some massive consolidation here for the better part of 2021 and coming into this year in 2022. And once it breaks out and breaks above 70,000, shit is going to be getting a lot more exciting and a lot more euphoric, and people are going to be much more back in the market. Things will be a lot more engaging on Twitter. Twitter's a little tough right now. It's also tough putting out content on YouTube because I know the engagement is so low right now. But I'm always going to be here, no matter what the engagement is like, to try to educate and help everyone. So everyone should know that about me about now. By this point, everybody should know that. So let's give a quick update on Ethereum. I did chart out. Now, if you did pay attention to the last podcast, I did say that I absolutely did not want to see Ethereum close below. Let me pull up the Ethereum chart here. Yeah, I think it was either a weekly or a 2-week chart that I had pulled up. Quite honestly, I forget. But the point is, I had said on the chart that I spoke to, I did not want to see Ethereum close below 3,600, right around 3,600. And boy, did the weekly candle on Ethereum close below 3,600. So the reason I said that was there was this descending line of resistance. There was a descending line of resistance that held as resistance for several weeks, many weeks. And we broke above it, and it was acting as support, which is awesome. That's what you want to see. but I didn't want us to break below it, because now what's going to happen is that descending line of resistance, it's going to act as further resistance when we try to get above it. So the strongest thing Ethereum could have done was remain back above that descending line of resistance and held it as support, right? It's not the end of the world, though, that we broke below it. It's not the most bullish thing to see, but it's not the end of the world. And one of the things I pointed out on Twitter is if you go back to basically, we'll say the 19th of July, if I'm looking on a weekly view on Ethereum, the candlestick that represents July 19th, 2021, from that point, we're still creating higher highs and higher lows. So the low that we got that came in around 3,000, it is still higher than the lows that came in back in September. And for that reason, what we are still seeing is we are still seeing higher highs and higher lows, which are the basic building blocks of a bullish narrative holding for Ethereum. The other thing I pointed out was that if you look at the RSI on a weekly view on Ethereum, it is it's actually slightly above what we saw in March of 2020. But the point is, it's at its lowest level. The RSI is at its lowest level since that capitulation event with the beer virus back in March 2020. So Ethereum is very oversold. There's a lot of pessimism in the market. If you go to the Crypto Fear and Greed Index, let me see if I can quickly pull this up. I tried pulling this up earlier and I got distracted. Here we go. So if we go to the Crypto Fear and Greed Index, you can Google this if you'd like. We are at 24, which is extreme fear, and it looks like we've been hovering in the 20 area here for a while. Wow. Back on the 9th, we went all the way down to 10. Jesus. All right, so things are very fearful right now. A lot of these projects, all these projects are looking for, most of these projects, not all of them. Harmony One's been kicking ass lately, but a lot of these projects, most of them look extremely oversold. And so the other thing I kind of wanted to point out here, I pointed out the consolidation in Bitcoin that's been taking place. And Bitcoin is, it's the overall driver of value in this space. And so you have to understand that the way that most of these crypto projects are going to react is going to be contingent upon the price movements with Bitcoin. We just have to exercise patience, right? One of the things I wanted to do today, real quick, before we get into Twitter questions and we get into the chart of the week, I kind of wanted to take a step back for a moment because, as you know, if you've been subscribed to this channel for a while and you follow me on Twitter, I feel it's very important to zoom out. Right? Zoom out because it helps to give you a perspective. If you get lost in the day-to-day price movements in such a immature, volatile market, you can lose the shirt off your back, right? And you can get stressed out, unnecessarily stressed out. So what you need to do is zoom out. So let's kind of talk about the size of the cryptocurrency market for a moment. Currently, okay, I jotted down some statistics here. So currently the size of the entire cryptocurrency market, okay, every single crypto project, if you looked at it and you added up the market capitalization of all of them, it's just under $2 trillion, okay, $1.97 trillion. Now, on the surface, to many of you, you may think that sounds like a lot of money. But with the following values and metrics I'm going to give you, this should illustrate to you it's really not. And don't lose sight of the fact that the dollar itself has become highly debased, especially with all the printing that has occurred within recent years, especially during the pandemic. And what that means a lot of things, but one of the things it does mean is that because what a dollar buys you today isn't the same as yesterday, you need more dollars. You need more dollars to buy today what you needed in the past, right? So if you need more dollars today to buy what you would have needed in the past, more of it today isn't as valuable as it was years ago, right? So $1 trillion today is not the same as it was even last year or 10 years ago. So it sounds like a lot of money, but just follow me here for a moment. So currently the size of the cryptocurrency market is $1.97 trillion. I looked at the top 5 U.S. stocks, just 5 U.S. stocks, the top 5 in terms of market cap. They totaled They were Apple, Microsoft, Google, Amazon, and Tesla. They totaled just those 5 companies. 5 companies. Again, we're talking all of motherfucking cryptocurrency. All of cryptocurrency. Every crypto project that you're familiar with all the real world use cases and disruptive technology that's out there. Okay? In comparison, these 5 stocks totaled, drumroll. Someday I'm going to have sound effects and it's going to fucking rock. In total, $9.51 trillion, which is 483% higher than the entire crypto market. 5 United States stocks are 483% higher in terms of market cap than global cryptocurrencies in total, all of crypto. 9.51 trillion compared to 1.97 trillion. Again, let's look at this now. Another comparison. The top 7 pharmaceutical companies in the world. The top 7 pharmaceutical companies. And I don't know what they are, how many total pharmaceutical companies there are in total. I mean, there's hundreds of them, if not thousands. I would venture to say hundreds. Top 7 pharmaceutical companies. They total $2 trillion. So essentially what we're saying is the top 7 pharmaceutical companies, 7 pharmaceutical companies in the world equal the total market capitalization of every single crypto project. And lastly, this one's sort of comical. The top 25 beverage companies have roughly the same market capitalization as all of cryptocurrency. Now, I saw 56 in total listed, and they come at 2.1 trillion, so there are a lot smaller players in there. So if we took every beverage company that existed, everything you drink from water to alcohol, okay, all of the beverage companies, they have a higher market cap than all of motherfucking cryptocurrency, which is... If you have any clue, I mean, people listening here have different ideas in terms of the value that these projects add. Some don't really have much of a clue, and some are quite familiar. We talk about technologies that will be interwoven into the everyday fabric of what we do in all sorts of ways, and we're so early, and we're talking $2 trillion. You're talking when you sit down at a bar, you wake up in the morning and have something to drink, your coffee. You know, you got your coffee, you're sipping on a beer. All that shit is valued more than cryptocurrency. Think about that for a moment. So just keep things in perspective that even though things are very frustrating right now, you and I just being here and educating ourselves, no matter how early or educated we are all very early. All very, very early. We just have to remain patient that even though things have been taking longer for this market to top, like many have felt, including myself, it doesn't mean that we haven't topped, and it doesn't mean that 10 years down the road, every asset that you're holding, or at least most assets, not every asset's going to be successful, but many of the assets you're holding aren't going to be worth a tremendous amount more in general. Hey, one other quick thing you can do, just to kind of validate my train of thought, this is just one thing. You can actually go to CoinMarketCap and you can look at historical snapshots for many of the cryptocurrency projects that you own. Not some of the newer ones, but some of the ones that have been here for a while. Take a look at not the price necessarily, but take a look at the market capitalization value and what it was, 5, 6, 7 years ago versus today. And that should give you some point of reference in terms of what the growth has been like. So let's get into the chart of the week. The chart of the week is one that I've spoken to on Twitter quite a bit. Again, I'm not here for the fundamental narrative in terms of pointing out a chart of the week. I am here to share with you what I see as a golden opportunity. And the chart of the week is ETC, ETH, Ethereum Classic to Ethereum. I fully anticipate, based on the chart that I tweeted out there for Ethereum Classic, by the end of this bull cycle to outperform Ethereum. Now, Ethereum Classic, I had indicated in some tweets out there. I wasn't shy about this. I loaded up on it because I loaded up on it at an average price of $30. This thing right now is sitting at $32.80. I've tweeted out a few tweets on it. there is a beautiful formation occurring within the ETC ETH chart that suggests to me that we have a huge room to run here. And in terms of where we top out, let me just give you some numbers to kind of put things in perspective. If you're not following me on Twitter, check out the chart. It's hard for me to describe on this podcast, but I showed a 2-day chart, some bullish divergence building on the RSI, which is actually playing out right now. It has actually appreciated moderately in value, but nowhere near where I expect it to be. Let's say, for instance, it hits the top of the green line that I've indicated on Twitter, which is somewhere around a 0.038680. And let's say that at that point in the process, Ethereum, so let's take a 0.03, this is how relativities work, 0.03868, okay? And let's say at that time, once Ethereum Classic hit that relativity value in relation to Ethereum, let's say Ethereum was pushing up towards 10,000. So let's multiply that by 10,000. That would mean Ethereum Classic would be valued at $387, which is more than a 10x from here. And that's about off the top of my head, that's somewhere between an 11 and 12x. Now, let's say once it pushed up to that value, Ethereum was at 15,000. Okay, that would put Ethereum Classic close to $600. Put it at $580. If we take 580 and we divide it by 32.7, which is its current price, that's nearly an 18x from current standings. And I know these things are hard to believe that, could Ethereum Classic really go somewhere between 300 to 500? This is what we call euphoria. Things don't make much sense once they're moving up tremendously in value. But again, Ethereum, if you look at Ethereum Classic at its current price of $32 or $33, it did hit an all-time high back in May of last year of $175. So even in relation to its prior all-time high, it's extremely suppressed. So I would suggest checking out the ETC ETH chart. I also think and of course, given I'm correct in asserting that Bitcoin has bottomed, Ethereum Classic has bottomed. Ethereum Classic bottomed at $27, in my opinion, as long as Bitcoin bottomed. Anything that you can grab this thing at $30, I think, is a steal, and I think will appreciate tremendously in value. So that's just my opinion. Nothing that I provide on this channel is ever financial advice. It's just my educated opinion. So with that being said, let's get into my favorite segment of the CBG podcast, which are the Twitter questions. By the way, if you have not, please like the video, drop a comment, and subscribe to the channel. Let's check out the questions. All right, so in no particular order, let's get into the questions here. The first question is from the Crypto Bringer. Yeah, so what the frack was that horse shit of a game on Sunday by the Philadelphia Eagles? This team, for anyone who's a football fan, and I know there's at least one person listening who's an Eagles fan, fellow Philly fan, I didn't know I wasn't surprised because the team's just been so up and down. I guess what I was honestly disappointed about was I did expect them to show up better than that between the coaching and the playing, because there's enough blame to go around. The quarterback tends to get all the blame and all the glory. I don't think it was all of his fault. I don't. I think some of it was the scheme that they put together in terms of how they played Brady. And also how the offense looked in the plays. I was not to say that Jalen Hurts didn't miss some wide open reads, because I clearly saw some replays showing some tape that showed that he missed some of that stuff. But I think there's enough blame to go around, and I would have been upset if we lost, but if we at least made it a close game. Like, we should have made that a close game. And instead, we got blown out. And the only points we really scored were in garbage time. So we could have just lost 31-0. We could have lost worse than 31-0. It could have been even worse. So just frustrating all around. It was very, very deflating. So I don't have anything comical. If Crypto Bringer were doing this with me, and chances are we'll be talking about this tomorrow, he'd have something funny to say. I really can't think of anything entertaining to say. I was just disappointed. This is a good question. So would you be willing, this is from Chimish. I don't think I've heard from you before, so thank you for the question. Would you be willing to go into a bit of detail regarding risk management? I don't understand how people enter trades with a 1 to 5% stop loss and not get filled instantly. So for example, if you buy at support, do you wait until it wicks under and re-enter, or when it touches? Thanks, BullGod. So here's what I would say. First off, way back in the day when I first started learning how to read charts, I did some paper trading, and then I started doing some day trading, and day trading was not my thing. I did not enjoy it. So what I tend to do, and I've hit on this before, I am more of, I would say 2 things. One, an investor primarily, an investor, which most people are successful at. I would say most people fail and fail horribly at day trading. And 2, I also do swing trades, but I would say the swing trades are what I would call longer term swing trades. So I might swing trade something for, the shortest would be like a week, but it could be a month, it could be 3 months, whatever the case is. Those are shorter term swing trades, but I'm mostly an investor. But in terms, I can help to answer your question though. So in terms of risk management, this is the way it should be done. This is the way I was taught, and this is the way it intuitively makes sense. Whenever you enter a trade, what you want to do is, the premise you want to have, you want to know ahead of time, if you're entering a trade, where you want to sell, okay? You can't enter a trade without knowing specifically where you want to sell. That's step number 1. Step number 2 is, you have to ask yourself, what's your risk to reward ratio? And in my opinion, you at least want it to be 3 to 1, meaning, this is something very simple. Let's give you a simple example. If your upside potential on a trade is 9%, your stop loss should be set such that when you enter your trade, you're willing to lose no more than 3%. That means you're willing to lose 3% on the trade, but the upside's 9%. You could even make it, if you're less risk averse, what you could do is you could make it 4 to 1, meaning if there was 8%, if there was 8% upside on the trade that you wanted to enter, so at the price level that you were entering at, there was 8% upside that you saw, and that's when you would exit your trade, or at least exit, most of it, let a little bit ride. Maybe you increase the stop loss as you go. But the point is, your initial trade, let's just talk about the initial trade, 8% upside. Well, your risk then to the downside should be 2%, right? So you're risking 2% for 8%. 2% is 1/4 of 8%. Or you're willing to lose, you see a trade for 2% increments, 8%, versus 2% increment on the downside. That's a 4 to 1. When I gave you the example of 9% up versus 3% down, there are 3% increments on the upside, okay, that's 9%, versus 3% risk to the downside. So it's a 3 to 1 risk to reward strategy. So 3 to 1, 4 to 1, anything more than 4 to 1, I mean, I wouldn't do it if I was trading, because it's just not enough of a risk. Your risk to reward ratio would be too high, in my opinion. I would stick to 3 to 1 or 4 to 1, but that's how I do it, or how I would suggest doing it. And what you can do is, once you hit that 8 or 9% gain, you sell. You could sell perhaps your initial investment at least, and then let the rest ride, and keep increasing the stop loss. You keep increasing your stop loss and just let your winnings ride, right? So if you invested $10, right, and you got the 8% on the $10, you sell the $10, okay? That's your initial gain, or your initial investment, excuse me. and then you let the amount that's on top of the initial investment ride. You don't just sell it all. You let it ride, and you keep increasing your stop loss. That's the way I would suggest doing it. Just my opinion. Again, not financial advice. Next question, Graham Evans. Oh, man, you got 2 questions? Come on now, brother. Actually, I appreciate it. There's no other questions here. So, 2 other questions. So, first question. After Mana, H-Bar, and 1, what would be your 4th pick and why? My 4th pick actually would be Polygon Matic. And I forgot to say that on the last podcast when people were asking me for other altcoin recommendations. So why? First off, whenever I'm considering an investment, I'm looking at the chart. And the chart on Matic is freaking phenomenal. It looks great. Apparently, I'm really becoming known for the word phenomenal. But the chart on Matic looks great. And then also when you look at the fundamentals as well, it seems to be an awesome layer 2 solution for Ethereum. It essentially seems to be Ethereum, but without all the gas fees. And then on top of that, you look at the community. It seems to have a strong community backing. They seem to have good partnerships. I saw that, several weeks back, Uniswap is now on Polygon as well, which is major news. They're a major DEX, so they certainly have it seems like they have a lot of momentum going. They've increased in market capitalization tremendously. I would be shocked at this point if Polygon Matic did not break into the top 10. So between the fundamentals and the chart, the TA, that would be my 4th case. I was kind of picking between that and Solana in my head, but I would choose Polygon Matic. And then the next question is, who do you think wins the SEC XRP case? Not any XRP questions in a long time. So I would say, it's interesting. The most recent development was that the SEC is going to have to turn over what information they have in terms of how they determined that Ethereum was not a security. That's going to be an interesting one because Ripple will be able to use that to its advantage to further prove that XRP is not a security. Ultimately, my belief is that Ripple will win the lawsuit. And furthermore, I think whether there's a settlement or they win the lawsuit, my belief is that XRP will not be considered a security. That is my belief. I'd be shocked if the case goes in the SEC's favor and XRP ends up being considered a security. So that is it for the Twitter questions. I wanted to thank everyone for tuning in. Make sure to check out CryptoBroz podcast tomorrow. I'm going to be looking to get at least 1 TA video out next week and then perhaps another the following week. So please join me in closing for a moment of silence for all of those I attempted on multiple, and I do mean multiple occasions. And by the way, many of whom are looking at me right now today thinking, I don't know what, I can feel it, thinking I don't know what the fuck I'm talking about just because things have taken longer than expected. I will, and everybody in here who has conviction will have the last laugh because the last euphoric leg to this bull run has not yet occurred. So anyway, those I attempted on multiple occasions to get into crypto and remain motherfucking ignorant. Gracias, mi amigos y mi amigas.